All right, so in this video, I'm going to give you a quick lesson on the most powerful way you can use support and resistance. I know a lot of you that follow me, you're a part of the Smart Money Concept community, and not everyone, I want to make this clear, but a lot of people, they kind of smirk at basic support and resistance concepts. They turn their nose up at it, and don't do that. Okay, I'm telling you, support and resistance, basic support and resistance can be very powerful if you utilize these tips that I'm going to mention in this video. And actually ICT has mentioned these tips as well. So it's really a lot of this stuff that you see in my videos is stuff that I've learned from him. So I always like to give credit where it's due. If you are interested in learning a little bit deeper, a little bit more about these concepts, make sure you check out his channel as well. I'll leave a link to that in the video description. But today we're going to be talking about a way that you can utilize the most powerful support and resistance levels. Okay. So right now I got a small cap chart pulled up, but I'll go over Forex. I'll go over Forex chart as well here in a second for y'all. But so let's start with GCT, and I'm going to pinpoint this for you, and I'm going to show you how this works. All right. So on GCT right here is a level of support. Okay. Just ignore these green lines right here. I want you to focus where my cursor is. All right. So just follow my cursor, and we're going to break this down step by step. Okay, by the end of this video, everything will make sense and you should have a really firm grasp and understanding of what I'm giving you. Okay, so look at my cursor. What do we know about support and resistance? Support is basically where price has found its bottom previously, if put in the most simple way possible. So see how this was the absolute bottom that price hit before we had to move up higher. See this? This is the floor. This is the bottom. See that? Look at my cursor. All right, so price found support right here. Price rallied up. That is a level of support, right? What happened? Price came back down a little bit later. What happened? Tested this level of support. It had a rally up. This is a confirmed. Here, let me clear off this chart real quick with these other levels just to make it easier. This is a confirmed level of support right here. All right. So I'm going to mark it so we can all see it. That is your level of support. See that? Every time prices come down to this level, it bounces, it bounces, it bounces. Now, what happens to support when broken? What happens to support when broken? Support when broken becomes resistance. Okay, we've all heard that. We've all read the textbooks. We've all seen the same stuff. Support when broken becomes resistance. Resistance when broken becomes support. All right, we've all heard that. And that's actually, it's true. Okay, that is true. But here's something that you can do that can increase your win rate dramatically when utilizing support and resistance concepts. And it's something that I do in my trading all the time. It's something that I did this morning with GCT because I ended up buying this, but this was a key point in establishing my PT. So GCT this morning, we all know what this is. 1, 2, 3, 1, 2, 3. Now I know most of you that watch me, most people that follow me trade Forex, you trade futures. I trade Forex as well. I don't trade futures, but a lot of these concepts, they can be used in every market, guys. I mean, I use the, fair value gap order blocks. I use it in small caps. You might say, hey, well, banks, they don't mess with penny stocks. Why are you messing with it over in penny stocks? I'm a practitioner. Okay, if I see success using concepts, I'll take these concepts, I use them in penny stocks. I see good follow through with them in penny stocks. I don't give a fuck if the banks use it in penny stocks, or I don't give a fuck if the banks trade penny stocks. If I see good follow through in penny stocks using these concepts, I will use it in penny stocks. Okay, and I see beautiful follow through using these concepts in penny stock. Okay, so this is a fair value gap. 1, 2, 3. See that? Now, what is inside that fair value gap? Your key level of resistance. Remember, it was a key level of support before. This was a key level of support before, but it got broken, and when broken becomes resistance. Now, this is key. These levels are respected best when they are in a premium market. Okay, so that's key. I want you to rewind that, play it again if you need to. These key levels, so support when broken becomes resistance, is really, from what I've seen, it's really only effective when it's in a premium market and you have, so that could be above 50% equilibrium, or another way to measure when prices tapped up into a premium market is with, in this case, a fair value gap. So you can see right here, 1, 2, 3. Let me draw it on here real quick so you can see it. There's your fair value gap. That is your imbalance. So price was not efficiently delivered right here, this pocket of price action. So as soon as price taps up into that imbalance, it's in what? It's in a premium market. That is another way. It's not just above 50% equilibrium, but also when you tap up into that fair value gap, right here on the 1 minute, that is a short-term premium market. So as soon as price tapped up into that imbalance, this is when your key resistance levels are respected. Because a lot of you that have used basic support and resistance in the past, you may have ditched it completely and said, hey, I don't even want to mess with it. I just see no follow through. I get no good results with it. Why am I going to keep using it? This is that missing link that I believe a lot of you are missing. That key level of resistance is really only respected when you have other concepts aligned with it, meaning it needs to be in a premium market. Whenever you have, say for example, that imbalance in there with it as well, you'll notice these levels, they get a lot more respected. Okay, you can get a lot more precise with these, with your entries and your exits, etc. All right, so again, one more time just to kind of drive it home here, this was support. Price came down, it found its bottom right here, it bounced. Came down, found its bottom right here, it bounced. Key level of support. What happens? Really strong move at the bell, cracks this level, creates an imbalance. That key level, which was support and is now resistance, is inside a premium market. That is key, and that's what I want you to remember. Okay, if you remember one thing, remember that these key resistance levels are really only effective when in a premium market. How do you know when price is in a premium market? Above 50% equilibrium is probably the most common way to determine that, but also once price taps up into an imbalance like this 1 minute imbalance, that is a short-term premium. Your key level of, well, now resistance, it's inside that premium market. Okay, and that's why it was so perfectly respected. And yep, you could see it rode over after that, and yep, that's what played out. So that was a short-term premium. And you might see this right here and say, well, look, it ripped up, so you were wrong. I said short-term premium. Okay, we're looking at this on the 1 minute chart. If you're a scalper, you could have targeted low of day. If you're a short seller, again, I ended up buying this off of $6, and my PT was up into this fair value gap. So I just little small scalp for me, but that was a short-term premium, and it did end up rolling over. Okay, so we're gonna look at another example, but this time on Forex. So let's just pull up a random chart, which is, I haven't looked at any of this. Let's just pull up Euro USD, and we're gonna go off first glance here. All right, Euro USD. I just put up some random 1 hour chart here, and off first glance, we can see something similar here. What did I just tell you? So resistance, these swing high levels are levels of resistance. Highs are level of resistance. Your lows are level of support. So boom, here is your level of resistance. Okay, it was a swing high level. Highest high in the middle, two lower highs on the left and the right. Okay, there's your key level of resistance. Right off the bat, boom. Here's another one right here. Key level of resistance. Okay, let's just mark that just for the heck of it so you can see it. So put simply, again, in the most simple way I can do this for a beginner to understand, resistance is just simply an area on a chart where price failed to move higher in the past. Support is the area on a chart where price has failed to move lower in the past. Okay, so this is the area where price failed to move higher in the past. See how it pulled back? It could not clear that level. This was the absolute high that price moved up into before you had this pullback, and it chopped around, it consolidated for a bit, and what happened? Boom, price just burst through that level, and now we got a new ceiling on it. And that resistance where price failed to move higher in the past, resistance when broken becomes support going forward. Okay, but how do we know if that resistance level is going to be respected? It needs to be. So just like a second ago with when I was looking at that small cap ticker, that support when broken resistance was in a premium market. This resistance when broken that becomes support is in a discount market. That's when it's respected, when it's in a discount market. How do you know when it's in a discount market? Well, that swing high, for one way you could do it is below 50% equilibrium of the price range. So it's below 50% equilibrium of that price range. So swing low to the high, below 50% equilibrium, that high has to be below it or at it or below it. Or another way to measure a discount market is price, or it's with a fair value gap. So we have a fair value gap in here. 3 candles make the fair value gap. 1, 2, 3. And for those of you that are new to, you have maybe no flipping clue what a fair value gap, like what are you talking about, a fair value gap? I don't understand this. I'm going to leave a link to that in the video description as well. So if you go to my video description, you will see I'm going to link a few videos on fair value gaps. If you watch those videos, by the end of it, you will have a firm understanding of what a fair value gap is. Again, I want to make clear, I give credit where it's due. Fair value gap is a concept that was pioneered by ICT, the Inner Circle Trader. His channel is linked in the video description as well. Okay, if you want a full understanding, a 100% understanding on the concept, then you need to watch his channel, because I mean that's the person who pioneered it. Okay, if you want to, it's best if you learn it from the source, right? But watch all those videos in the video description, and it'll be clear by the end of it. So I'm not going to dig too much into it in this video. This is basically just a support and resistance video. So this level of resistance was broken, becomes support. Price pulled back into a discount market. Again, a discount market because we have our imbalance right here. 1, 2, 3. There's your imbalance. As soon as price pulls into that imbalance, the 1 hour is in a discount market. As soon as it taps down into this imbalance, into this 1 hour imbalance, we are in a 1 hour discount. Just on the 1 hour. The 4 hour could be different, the daily could be different. All right, because you gotta remember, price moves into a premium and discount on all time frames. Price is fractal, but this is just on the 1 hour. It is in a discount market on the 1 hour chart because it's trading down into an imbalance. Now, this is when these key levels become very powerful. And don't just take my word for it. I want you to watch this video, and I want you to go into your own charts, and I want you to study it for yourself. This is when these key support when broken, when these key resistance broken becomes support. That's when those key levels become very powerful. Okay, that's when these key support levels become very powerful, when they are in a discount market, when they are in a discount market, when they are in a discount market. Okay, that's the point I want to drive home here. Okay, and the resistance levels are powerful when in a premium market. This is in a discount market because that was in a fair value gap. The fair value gap is that discount. This is your key levels of support inside that discount. See how it tapped it perfectly and boom, pops up. That didn't happen by accident, okay? That was because of this level inside a premium market. That is when these levels of support become powerful. So don't just throw away support and resistance concepts completely. They're very helpful, they're very useful, and they're very powerful within the proper context. All right, but you need that discount market, your premium. A firm understanding of discount and premium market is key, okay? And that's when you'll see really, really good follow through with these support and resistance concepts. So hopefully you found this video useful. I'm going to be making some more videos in the future on support and resistance concepts, because if it's still a little bit your understanding is a little bit cloudy still, don't worry, I got you covered, and I'll be covering it in a little bit more depth, in a little bit more detail in the future.